My mission is simple, to make you money. I'm here to level the playing field for all investors. There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now. Hey, I'm Cramer. Welcome to Mad Money. Welcome to Cramerica. I've been one of my friends. I'm just trying to make you some money. My job's not just to entertain you, but to educate and teach you, so call me, 1-800-743-CNBC, or tweet me at Jim Cramer. Mass? We don't need no stinking mass. With one speech from the head of the CDC, this rally was born. All right, granted, there's a little more to it than the mass guidance. We also got a bunch of data points that made our inflation worries go up in smoke. Put it all together, though, and you had all the ingredients for a terrific second-day rally. With the Dow gaining 361 points, S&P surging 1.49%, and the Nasdaq skyrocketing 2.32%. What's incredible is that this move had almost nothing to do with earnings. I mean, sure, we got Disney's yesterday, but I think the market's negative reaction to the very good set of numbers smacks of bogosity. Disney just got the greatest gift, mask-free theme parks. I mean, come on. You don't have to wear this anymore. Well, maybe you didn't want to wear this one to begin with. All right, anyway, we're supposed to dump the stock because some analysts got ahead of themselves on forecasting Disney Plus, and it was their fault, by the way, because the company made the numbers. I say buy the stock at Disney. It's the perfect reopening stock, and today's run was all about the great reopening. So let me just tell you something. You should go...
House of pleasure.
The house of mouth. All right, so what's happening next week? Let's get serious here. Next week is retail week, when most of the major chains report, and I think that's going to generally be pretty darn good thanks to the stimulus checks and all the pent-up demand from the pandemic. But first, we have to get through Monday when we hear from two important electric vehicle makers, Lordstown Motors and Fisker. Lordstown's a former market darling, was trading at $31 less than 4 months ago. Management has been excessively promotional when touting their pre-order numbers. Bad call. Since then, the stock has plunged to $7. Fisker's got a lot more legitimacy, even as it's been hammered along with the rest of the group. I think they'll have a better story to tell about their electric SUV, the Ocean, though I don't know if it's going to matter. They had that Foxconn deal. It's up a little already. Tuesday morning retail week kicks off when Walmart reports. Now, there's been a lot of chatter that the company's doing well, but e-commerce execution fallen hopelessly behind Amazon. No possibility of catching up. I got to tell you, I have not been able to confirm that grim outlook, and I remain convinced that Walmart's worth owning. We own it for the charitable trust, which you can follow along by joining the ActionAlertsPlus.com club. We also got results from Home Depot. And while the trust doesn't own that one, there's a good chance that's probably a mistake. I say a mistake because this may be the most successful do-it-yourself renovation gardening season in ages. One wrinkle. Home Depot has a nasty habit of having its stock run into the quarter. So if it has a good day Monday, the stock might sell off after the quarter, and that's your chance to pounce. We hear from Macy's, too, but sadly, I fear that much of whatever gain it might have has been stolen by today's 14% advance. I expect still one more slightly better than expected set of numbers with a positive undertone. Macy's really needs foreign tourists to visit its stores in Miami and New York, particularly, and they got to buy some merchandise, and we are certainly not there yet. After the close, we get results from Take-Two Interactive, the video game maker that was fabulous stock when everyone thought we'd be stuck indoors from here to eternity. But now Take-Two is regarded as the ultimate lockdown stock in a world that's going back to normal. I beg to disagree. I think this business isn't going anywhere, which is why we own it for the trust. The stock's fallen nearly 50 points from where it was trading just before it reported a pretty good quarter last time. I think it can run here. We hear from three market darlings Wednesday morning. I bet all three deliver. I'm talking about Lowe's, Target, and TJX. I think a rejuvenated Lowe's under the leadership of Marvin Ellison is taking share from Home Depot. Meanwhile, Brian Cornell's Target can't stop putting up good numbers after reasserting itself as the dominant fund discounter. TJX quietly makes great money, and this time should be no different. I'm going to stay close to Analog Devices, ADI, in the morning, and Cisco, the CISCO kind, after the close, because they're among the most important tech companies reporting this week. I think they'll both make us feel real good about the business. Analog Devices makes all sorts of chips for thousands of end market users. I mean, their chips are everywhere. Cisco does networking hardware and software for the enterprise. Big companies, I expect very positive outlook from them. Thursday's a quandary. We get numbers from Kohl's and Ralph Lauren, both of which have seemed, I think they both borrowed a lot from the good news here. Kohl's has soared 51% this year. RL's up 31%, and they just got a big boost when they sold the merely okay Club Monaco division to a private equity firm. I say merely okay because my wife bought me some stuff recently from Club Monaco, and I don't want to say that she doesn't know what she's talking about, but she doesn't know I have a show, so it doesn't really matter, okay? Ralph Lauren's going more youthful and upscale, so therefore it definitely wants to dump me. It's a good move, and I predicted upgrades into the quarter. I think that people still been waiting, get off the sidelines, analysts, and recommend it. As for Kohl's, it's too daunting after that huge rally. Now, and I have not been, I've been not the best on Kohl's, okay? It went all the way down. I had owned it for the trust. Suffice it to say that other people know Kohl's better than I do. How's that? Also, got to own this stuff. You got to admit this stuff, or else people say he doesn't even admit that he didn't get it right. It's better just to admit. Also on Thursday, there's Petco, and that's the aptly tickered Woof. I like the humanization of pets theory. I think that that's been one of the most productive, whether it be from IDEX. Lanco was up very big this week. And these guys have given us, I think some pretty good, let's say, intel that things are going well. I think they'll be able to capitalize on the pandemic pet boom. I know they've been doing a ton of advertising. Then again, the stock jumped nearly 9% today, so it could again get away before the quarter. People are trying to buy these stocks in anticipation. We know the food stocks have become victims of tough comparisons versus last year when everybody was stockpiling. I'm banking on Hormel to buck that trend when it reports Thursday morning. See, they recently bought one of the most undermanned, undermanaged, underspent brands in the history of the supermarket, and that's Planters Nuts. And I bet they tell a great story about how that acquisition is already paying off. Thursday night, we get results from Applied Materials, AMAT, and Palo Alto Networks. I expect great numbers from both, but I am worried about the forecast from Applied Materials, as it's the premier maker of semiconductor capital equipment. See, they'll have to deal with analyst hecklers tearing apart every sentence, if not every word, because of a sudden plunge in some of the semiconductors, not the ones that go, unfortunately, into cars. I think that's a total exaggeration, but it won't stop the analysts from being skeptical. Palo Alto, that's so much easier. Who doesn't want a cybersecurity play when a bunch of hackers just shut off the supply of gasoline to the East Coast? I bet they have excellent numbers. Deere reports on Friday. I'm telling you now, it will be a blowout. It'll be an upside surprise. How can something be a surprise if we all know it's going to be a surprise? Riddle me that. But unless the grain complex collapses beforehand, it's probably, let's just say, good, but not fantastic. So be sensitive to the commodity chatter, but understand that we're looking at the strongest agricultural cycle in a decade. We also hear from VF Corp, and I think it could be at the right level. This apparel company's been inconsistent, and the stock will be hostage to Kohl's and Target. Of course, those are the customers. In retrospect, denim's gotten so hot, I wish they hadn't spun off their jeans business as Contour Brands. Finally, you want Nike without the China worries? Then you might want to buy Foot Locker, but I'm telling you to look at the stock first. That move has already been made. I think you could have a gap up before getting hit with concerns that there's just been too much of a good thing and not enough woe, so it's time to go. The bottom line. Next week's about the consumer spending, okay? Whether at home, outside, in the mall. But before you bet on which retailer's doing the best, you need to count where their stocks are coming from, because some of them have run too much, while others, well, they still got room to play catch-up. Let's go to Gotham in New Jersey. Gotham.
How you doing, Jim? Booyah.
Booyah. What's going on, my friend?
All right, I'm calling you from the Garden State, Millstone, New Jersey. I got to tell you, I'm a big long-term fan, but my father always makes me turn down the volume when you're on. And let me tell you, watching the show is not the same on closed captioning.
Well, I don't know. I think watching it all is pretty good, but thank you. I got 2 viewers there. We'll make them lower. How about that? What's going on?
So what's going on with Lyft, Jim? We all know that Uber and Lyft are the future of taxi services.
Well, I'll tell you the problem. I don't know if you got a chance to listen to Tony Hsu from DoorDash last night, but he said there's like a shortage of Dashers, and I think that drivers are going to get more expensive. That said, Lyft had a nice 3-point gain today, so if you do want to go when the getting's good, which would be probably Monday, when I expect a lot of analysts will come out and say, "Ooh, raising price target Lyft." Let's go to Anand in Georgia. Anand.
Hey, Jim. Thanks for taking my call.
Of course.
Yeah, I have a question regarding ServiceNow. I am down 10% on that. Should I hold it? Should I sell it?
You should buy it. See, now listen, that's very interesting. Anand's asking a question. Should I hold it? Should I sell it? Well, how about the fact that Bill McDermott is a great CEO, that they've got tons of things in the pipeline, a lot of deals that are doing well, and the stock has come down a lot. So my take is, buy. I'm nixing the hold, and I'm nixing the sell. Nixon. All right, Michael in Florida. Michael.
Big booyah to you, Cramer. I just want to give a quick shout out to Blue in Berlin who put me onto your show.
I like that.
I absolutely love it.
Oh, that's so great, man. Thank you.
My question today is going to be about Haynes, man. It's down like 14%, I think, right now, and I think it's going to be a comeback play.
Well,
because,
it is.
people
I don't know why.
I mean,
obviously, there were two pieces of good research out about it just yesterday. It's a very good story. I'm kind of in shock that it was down the day before. Two pieces of research is on Wednesday. So I agree with you. I think it's a good situation. 3% yield. I think Haynes is going to work. But remember, in the end, it makes this. And that's not exactly high fashion. And this one's a large. I think I have to go to a medium, get a little more trim. All right, anyway, next week's about sharing everything. Now, next week's about consumer spending. But keep your eye on where the retailer stocks are coming from. They may have moved too much already on Mad tonight. Only 1% of venture funds went to black entrepreneurs. Tonight, I'm talking with the CEO of Constellation Brands about how it's working to solve, or at least try to solve, racial inclusivity in the wine world. Then when a talent activist starts calling for changes that will keep the company, how should you approach the stock? I've got a case study or two. And I'm talking the comeback of the cloud stocks with the CEO of Five9. So stay with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.
Shepard Smith here. Thanks for watching CNBC on YouTube.